What if you had invested just £1,000 into Costco 10 years ago? Not a meme stock. Not a hype trade. Not something people argue about online. Just Costco. The warehouse retailer most people associate with bulk groceries, cheap fuel, and a £1.50 hot dog. It doesn't sound exciting. And that's exactly why this story matters. 10 years ago, Costco wasn't dominating headlines. It wasn't trending on social media. It wasn't considered revolutionary. It was just quietly doing what it has always done. Selling everyday items. Running tight margins. And growing steadily. So let's go back in time. Around early 2015, Costco shares were trading at roughly $140 per share. At the time, £1,000 was worth about $1,500. That means a £1,000 investment would have bought around 10 shares of Costco stock. Not a fraction. Not a tiny position. 10 full shares. You buy them. You hold them. And you do nothing else. No trading. No timing. No stress. Those 10 shares are the foundation of everything that comes next. Because from that point on, every dividend Costco paid was paid per share. And every price increase applied to all 10. Now here's where Costco really separates itself. Unlike many growth stocks, Costco doesn't just rely on price appreciation. It also pays dividends. Not flashy dividends. Not eye-catching yields. But consistent, growing, and reliable. Year after year, Costco returned cash to shareholders. Even during market downturns. Even during uncertainty. And occasionally, Costco did something unusual. Special dividends. Large, one-time payments designed to reward long-term holders. Not traders. Not speculators. Owners. Now pause for a moment. This is not financial advice. This is a historical look at what actually happened. Nothing here is a recommendation. Back to the story. If you held those 10 Costco shares over the last decade, you wouldn't just benefit from the rising share price. You would also collect dividends. Every year. Quietly. Consistently. Over roughly 10 years, the regular dividends alone would have added up to hundreds of pounds on a £1,000 investment. And that's before accounting for special dividends. Depending on whether you reinvested those dividends or took them as cash, your final result changes. But either way, you were being paid to wait. Meanwhile, the stock price kept moving higher. Costco expanded internationally. Membership revenue grew. Customer loyalty stayed incredibly strong. And the business model never changed. Sell quality products. Keep prices competitive. Repeat. While other companies chased trends, Costco stayed boring. And boring compounded. Fast forward to today. Those original 10 shares are no longer small. Not because of one explosive year. Not because of hype. But because of time. Over the last decade, Costco stock has increased several times over in value. Those 10 shares would now be worth several £1,000s on their own. When you add the dividends received along the way, including special payouts, the total return becomes even more impressive. Conservatively, someone who invested £1,000 into Costco 10 years ago, bought roughly 10 shares, held through market cycles, and collected dividends, would now be sitting on around £4,000 to £6,000 today, depending on the exact buy date and how dividends were handled. That's not overnight wealth. That's real compounding. And here's the part most people overlook. This return didn't require perfect timing. It didn't require constant monitoring. It didn't require emotional decisions. It required patience. Costco didn't reward excitement. It rewarded consistency. There were years where the stock barely moved. Years where flashier names stole attention. But through all of it, Costco shareholders were still being paid. That's the power of dividends combined with a strong business. Not massive yields, but reliable growth. When markets panicked, Costco shareholders still owned 10 shares of a business that kept operating. Most people search for the next big winner. Very few stick with proven compounders. Yet when you zoom out, these are often the companies that quietly build wealth. Costco didn't explode. It climbed. Step by step. Year by year. And 10 years later, the results speak for themselves. So when people ask, what if I invested £1,000 10 years ago? Sometimes the answer isn't Bitcoin. It isn't Tesla. It isn't hype. Sometimes it's a company that sells groceries in bulk and rewards shareholders for staying patient. That's the real lesson here. Not every winning investment is exciting, but many of the best ones are boring. If you want more long-term investing breakdowns like this, without hype and without noise, follow for signal, not noise.